What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we are going to be covering the SOFI stock. This is the first trading day of the new year, 2025. And actually, today, overall, inside of the market is a pretty solid green day, especially with some fintech and some other growth stock names. But that is not what's happening for SOFI today. Early on in the night, last night, before the markets opened up, pre markets, there was a downgrade, a sell rating that was starting to hit the markets. And I'm telling you guys right now that this sell rating and downgrade was all planned and targeted for someone to make a profit off the fear. I have literally counted almost 10 separate media outlets that this sell rating is being pushed out to. This was planned and set up over the past 72 hours, guys. Most likely, these guys took a short position over the next 2 weeks, buying some puts and stuff like that. But I'm telling you right now that this was all planned and fabricated over the past 72 hours. This thing is being pushed out like I've never seen a sell rating pushed out before. And the work is sloppy, guys. The analysis is awful. These guys are valuing SoFi off legacy banking metrics. I'm talking 10 times forward PE ratios, guys. That's how bad it is right now. These guys have also done targeted short downgrade sell ratings literally at the exact same time last year on the 3rd. Literally a 1 day difference from today. So, guys, KBW is who we're talking about today. We're going to cover the analysis. We're going to also show you guys some high level people and what they think about the analysis that these guys wrote up. I'm telling you guys right now, this is all short term fabricated short selling, trying to make people sell, trying to make a profit. These guys do not know what they're talking about. I'm telling you right now that SoFi is literally going to have an amazing 2025. We just got screwed, to start the New Year's off, but that's fine, guys. Get the sellers out, lower the RSI, and it's time to hit the moon once we get to that Q4 earnings, which I believe SoFi is going to release the earnings report in the next 48 hours. So let's get into the video. If you find any of this information useful, be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. Let's get into it. All right, guys, let's just take a look at the SoFi stock right now. You can see the SoFi stock is down about 6.5%. It did drop to about 1390 or 14 or something like that. So we probably went down about 9% early on in the market, guys. They hit this stock hard with this targeted, sell rating report. We're going to show you that right now. All right, guys, we're going to take a look at Webull and just look how many media outlets this was pushed out to. This is absolutely insane, okay? Look at this. 19 hours ago is when they started this. This was literally at like 8 to 10 o'clock last night. That's one. Two right here. Three bar charts. Four, Reuters again. Five, Benzega. Six, Benzega again. Dow Jones, 8. Dow Jones again, 9. Some of these guys are doing 2. Barron's, 10. I mean, guys, we're talking 11. You see what I'm talking about, guys? They push this thing out down people's throat all across the world, okay? It doesn't matter where you're investing in the world, guys. This sell rating was planned and targeted, guys. You see right there a dozen media headline outlets that this sell rating is pushed out to. Let's get into the sell rating, who it was, why they did it, analysis, everything. All right, guys, this is who you're betting against right now. This is who said to sell the SoFi stock today and gave an $8 price target right here, guys. KBW. This is Tim Switzer. He's like a vice president of equity, management or whatever in his firm at KBW. This is who you're betting against, okay? And he actually has a pretty solid rating, 4 stars, 1,400 out of 9,200. So it does look like he makes some solid buy, sell analysis. And you can see right here is the sell rating updated last night. Downgrade sell rating, $8, 48% downside. Literally going into the Q4 earnings report in literally the next 4 weeks. All right, guys, so we want to get a very good in-depth analysis of what this guy's talking about and some good, feedback on what this guy is saying. So we're going to go off Tim Sweeney and see what he had to say. So, guys, take a look at this. This is another analyst that doesn't account for SoFi's growth and has inconsistent valuations. KBW downgrades SoFi and basically states that it deserves a 10 times PE ratio multiple, even if it achieves its alleged lofty guidance. Literally, I was pushing the same thing on my Twitter. Go look at my Twitter. That 10 times P ratio. I retweeted like 3 times. Like, what is this guy talking about? Legacy banks right now are getting a higher PE ratio than that. As I stated before, SoFi likely will hit the following EPS range: 15 cents this year, or last year, 2024, 2025, 35 to 40 cents, 2026, 80 to a dollar. So this analyst concludes that if SoFi achieves these numbers, SoFi should be valued at 8. So think about that, guys. To go from 15 cents to a dollar, I mean, what are we talking about here? 500, 600% growth to get a lower valuation than legacy banking PE multiple of a 10. They're trading at 15 right now, and we're talking 500% EPS growth in the early stages. Absolutely insane. So apparently Goldman Sachs just gave Noto a free 6 million on his, sale. By the way, in mid-December, KBW reiterated a buy on Bank of America when it was $46 and set a one-year target at 57, about 24% predicted stock price increase due to the legacy bank. That's funny because in November 2023, the same analyst upgraded his sell rating in Bank of America to a market perform, setting a target for the end in 2024 of 30 and was off by 16 a share. Guys, look at this. Bank of America is trading at a 15 times PE, and they're trying to give SoFi a 4 PE 10 in their analysis. PEG ratio at 2.94, book value growth rate 5.3%, EPS growth rate 12%. A PEG ratio over 1 is overvalued. Bank of America is literally almost at 3. SoFi's PEG ratio, if it hits its targets, is substantially under 1, and its PE ratio growth rate will be over 100%. Guys, what are we talking about with this $8 sell rating in this analysis of a 10 times PE when Bank of America is getting a 15 times PE, and Bank of America has a PEG, and if SoFi hits its growth rates, it's going to get a PEG under 1. What is going on right now, guys? This is garbage, sloppy work. Do you see the dude who you're betting against right now? And they're able to move this stock 9% early on in the morning, guys. It's because they pushed this thing out to 12 media outlets inside of the world. This is crazy what's going on. So yes, KBW thinks it makes total sense that SoFi, with much higher growth rates on all metrics, should trade at a substantially lower PE ratio than a legacy Bank of America with all of its problems. I think KBW may need to buy some new crayons for their analysis. I can't wait to post after I read their entire report. This is more than just a common mistake of not giving any credit for growth, but hey, look at their track record. They had a sale rating on Bank of America November 1st, 2023, and appreciated it in the next year about 70%. So I guess if SoFi had the same results, it would be about 26 to 28 at the end of 2025, which is consistent with my estimate and their historical results and predicting Bank of America's results. So guys, you can see exactly what we're talking about. They're just not pricing in any growth. They're literally pricing the company identical to a legacy bank. It just does not make sense. I mean, we don't even know what type of growth SoFi is going to have in 2025, 2026. I mean, they're saying it's going to be basically nothing, okay? We know what's going to happen, guys. This company is about to grow EPS 500% over the next 2 years. The analysis is sloppy. This analyst is a joke. I'm telling you right now, SoFi is going a lot higher. We will recover from this pretty soon. And also take a look at this, guys. Data-driven investing also did the same analysis on, KBW's report, talking about the 10 times P ratio. But listen to this. As a reminder, this is the same analyst who said to short SoFi before Q2 earnings because his analysis showed that SoFi's net charge-off rate would be 6.3 to 7.1%. I mean, this is huge, okay? This is not what the market was predicting at all. The actual results was 5.4%. He was dead wrong. I'd wager his analysis will again prove dead wrong, guys. This dude has been making some massive claims and had some massive misses. And I'm telling you right now, I'm going to show you guys that this is all targeted over the past 72 hours. These guys did the exact same thing last year. Look at this, guys. January 3rd, 2024. 1 year and 1 day separate from what just happened today, guys. These guys are literally just targeting SoFi to make some money, short sale, all that type of stuff. Look at this, guys. This is a different analyst. KBW Michael Perito, $6.50 a share. So yes, they have gone from $6.50 to $8, but they're still recommending a sell rating right now, 50% downside. This is the analyst that did this rating a year ago.
Let's talk about SoFi because it isn't all good news for some of those financial plays out there. KBW out downgrading SoFi to underperform from market perform. Now they're saying that they see stagnant technology development, weighing on results. A lot of this goes back to origination growth, the lack thereof, slowing origination growth here from KBW, calling out CapEx constraints, calling out limited profitability. They think that that is going to handicap SoFi's performance here, at least in the first half of 2024.
Yeah, I mean, I think it also gets to, not breaking news here, the way that these firms differ, right? And that SoFi is about originating account, opening accounts, finding new consumers essentially to walk in the door and use their services, whether that's consolidating loans. They have obviously a huge student loan, payment part of that, high yield savings accounts, all these kinds of things. When you get into a money center bank, you've got all kinds of business lines, all kinds of levers.
All right, guys, you see it, but you can see what happened. Fast forward a year from there. SoFi has got to 10 million members. They're closing small fintech deals with the Galileo tech platform. Origination lending skyrocketed to all-time highs inside of Q4, and you can see that's heading into 2025. And now these guys are backpedaling to 10 times PE ratios, saying they're not going to hit their guidance for the exact same thing 1 year later. So you guys can see they just like to target short selling tactics. This had to have been planned the past 72 hours because it went out to 12 media outlets. So I hope this video gave you guys some great, updates on, SoFi, the company's growth, and how this valuation does not make sense of where these guys are trying to price the company at, what they've done the past 2 years, and just this whole KBW shorting SoFi in general. I mean, these guys are literally clowns because, this guy said 650 and the stock finished at 15 on the year. That's literally freaking, I don't even know what, a $9 difference. So these guys are clowns. The stock's going a lot higher, you can see. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. Once again, we're going to keep you updated on all the breaking news with the SoFi stock. Be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We're going to be keeping you updated daily. Hope you have a great day.